All right. So, hope everybody is having a great day. It is Monday, May 15th. We took 4 trades today. One was actually last night in the overnight session. We swung NQ, but price target got hit, and then I took 75% off, and then the last contract ended up getting stopped out at break even. And then we ended up taking another win and then 2 losses. So again, that's the first thing I want to talk about, right? We went 2 for 4. Now that's a 50% win rate. Now, a lot of people are going to say, if somebody that is coming from an outside perspective and a trader, somebody that's going to look at that is going to say, okay, you're not making any money, right? If you have a 50% win rate, you're not making any money, which is not true at all. As traders, we have to recognize certain risk parameters and understanding what positions that are actually, valuable for us to trade, right? So risk reward is something that most people need to focus more on. And a lot of the times I'll end up taking trades that have good risk reward, even if I'm not super confident in it. And the reason is because I'm okay with risking and taking a small loss if in return I could make, a big win, like a 1 to 10. Sometimes I'll enter in with, small size with 1 to 10 because I'm risking such a small amount that I don't even care. I'm up on the day. So that's what we have to realize when trading, especially because I actually care about you guys and you guys that trade on the live with me, and I want to make sure that everybody's protected capital wise, right? And so I want you guys to understand how I trade when we're dealing with size, right? Because there's always going to be, again, I can't control it, but there's always going to be people that over leverage when they trade with me, and they're going to, all in their portfolio, and then we're going to take a small loss. They're going to get pissed, and then we take a big win afterwards, and they don't take it because they blew up their account, and then that's just how it is. But I actually care about you guys, and I want to make sure everybody's on the same page when it comes to thinking like that, right? As traders, our goal is to find probability setups, right? Where we base everything off of a system. And if there's no system for us to base anything off of, there's no reason for us to take any trade, right? Everything about trading is having to deal with some type of edge. We have an edge of sorts. In the markets, if you don't have an edge, then again, the market will beat you, 9 times out of 10. So without an edge, there's no really reason to trade. So since we do have an edge, and sometimes that edge will not, perform, right? There's going to be losing days where market conditions don't align. And that's when having risk management and proper position sizing comes into play, because being able to survive those weeks and those days, that's the biggest thing, right? Trading is longevity. And if you have consistent position sizing, you'll be okay taking those small losses, especially if you're confident in your trading, right? I'm confident in my trading. I know that my winners are way bigger than my losers, and I'm okay stopping out of certain trades. So that's the first thing I want to talk about. Now let's go into those trades that we took. So the first trade I took was on NQ in the overnight long position. I'll show why I took this trade. So again, looking at a 4-hour, a little bit cramped here because I have all these levels, but let me zoom in a little bit. Number one, looking at a 4-hour, or actually I want to start at the daily. First thing, we have a daily fair value gap. So if we look at the daily, you can see candle to candle, we have this little gap here. This candle came in, and our daily immediately responded from this and closed back above this. And then our next daily candle also came into this and then closed above it as well. So we continue to hold 2 daily candles are holding this fair value gap. Now, you might say, Justin, we just swept this liquidity level, right? Why are we not bearish? Well, since we did sweep this, you're probably asking, why am I not bearish? The reason I'm not bearish is because for me to be bearish after this level gets swept, I need to see displacement to the downside. If we don't get displacement to the downside, then we're most likely going to go continue higher. So there's 2 ways that I was looking at this. Zooming back in now, what would be my market structure shift? On a big time frame, like a 4-hour, this would be my market structure shift. So if the market's going to continue lower, we would have to break this level with big displacement and actually sell off, right? But we didn't. We broke through it and then immediately got bought back up. So another thing I also looked at is we had equal highs on a smaller time frame somewhere around here, and we also have equal highs of this high, which this is now the draw on liquidity. In my opinion, these equal highs are now the draw. So going into tomorrow, looking at I'm getting ahead of myself. So back the trade we took, right? We sold off, bounced off that previously weekly opening gap, came right back to it, continued to hold, zooming in to a 15-minute. We get market structure shift, right? Where would our market structure shift be? Whatever that previous high is. So we get internal liquidity being swept at the low. So we break that low, come up, put a high in, and then come back down to sweep that low one more time. And then we have a high now put in, right? So this is now our market structure shift. We get it with good displacement, right? Big displacement through it, pulling back now. Now zooming in, look at the 5-minute here. We have a breaker block. Breaker block pulled over. Come back in this, continue to chop. I look for an entry on the 1-minute. I want to see some sort of break of structure and then a fair value gap. Zooming in, I entered somewhere around, I entered right here. We got a nice little displacement up, entered here, somewhere here. My fill was like 1,360 or one somewhere around there. And then I put my stop at the 1 hour candle low. Now, the 1 hour candle low, because that's going to be whatever is invalidated, right? So the reason I put it there is if you look at the 1 hour, we have a fair value gap here, right? So if I was to take a trade on the 1-minute here, my stop would be the previous wick of that low. So that's what I'm going to do. Since this is a bigger time frame trade, I put my stop here because this is what's going to be invalidated. Since we have a 1 hour fair value gap, this would have to be invalidated, which means this candle wick would have to be closed. So that's where I put my stop, is at the bottom of that 1 hour wick. So I have everything I wanted for this model, right? I have liquidity swept on a bigger time frame. On a bigger time frame, we're overall bullish. We have a 15-minute fair value gap on a bigger time frame. We're holding weekly opening gap. We have big displacement to the upside. We have market structure shift. We have a fair value gap and a breaker block, and we have equal highs above us, clear equal highs. And the equal highs are right here. So I'll show you on a smaller time frame. They're kind of hard to see. Let me zoom in here. You can see equal highs right here. All of these stacked equal highs, right? A plus setup. 1, 2, 3, 4, 5 equal highs. So that was the first trade we took. Beautiful, beautiful long. I took off 75% here, and then we ended up selling back off in the day, and I ended up getting stopped at a break even, and then we ended up bouncing there. But again, still holding that breaker block, continuing to hold, still looking good. We got bounce up immediately after that. And like I said today as well, we again, this is going into the other trade that we took today, which I honestly was very, very weird. And it kind of sketched me out because we never ended up sweeping that low on NQ, but we did sweep it on ES. So technically we were forming SMT, but it's really weird because NQ was like 2 points off of sweeping this level. And I would have rather seen us sweep this level than create, almost relative equal lows. So that kind of sketched me out because I ended up taking a trade, and that's where I broke my rules today. So that's number one. So we took the first trade here. Beautiful long. What was this move? This was like a 60-point move. So beautiful trade in the morning. So going into today, my bias for today was overall bullish. Now, I did say in the morning I would like to see a sell-off back into, we now have a 1 hour breaker block. And again, we ended up still holding this 1 hour breaker block. We pull back into this, still hold this, and ended up getting bounced. This means the draw on liquidity is equal highs. Now, again, I was very long biased and wanted to see a long setup down here. But again, we have to adjust and realize that we are in a 1 hour. We can go below this and go lower and still end up closing back inside of this level, right? So when we're trading on a smaller time frame, that's something we have to take into account, right? Knowing, okay, we're pulling back into a 1 hour breaker block. That means I shouldn't get swayed and focus too much on, the 1 minute time frame, but more on the 5 minute and see how candle closes. What kind of structure do we get? And stuff like that, right? The setup here would have been this right here. 5 minute fair value gap formed right here, pull back here. This would have been your long entry targeting that previous high right here. But I was away from my computer when that hit, but that would have been a really, really nice long setup on NQ. That came later in the day. Now, this is where I got sketched up. So first trade I took today was an L. It was this right here on NQ. And I'll tell you why I ended up taking this. So Draw this in. Let me pull ES up here. Let me zoom in. So at this specific time, I have kind of everything I wanted, right? I had a sell-off. At this point in time, I didn't think that we were going to that previous liquidity level until we broke through this breaker block. Now, again, we were in that breaker block. I wanted to see us continue to hold, and I wanted to see a break of structure. NQ was showing a lot of strength. Now, the reason I shouldn't have taken this is because I never really got clean displacement, right? This was our break of structure, but we sold right back off, right? We had no candle close above this level. And normally when I want to see a break of structure, I want to see big displacement. Now I got big displacement, big buying pressure. And that's where I got that's why the reason why I entered, but I never really got big displacement through this level. Now, the reason I took this trade, which I'm honestly, it was not a bad trade, is we ended up selling off. NQ was showing a lot of strength. ES was selling off hard. And I was pretty confident that I wanted to see ES take the low and then form SMT. So that's the reason why I entered. Is at the point is ES ended up sweeping that low and ended up forming SMT. So we started to bounce a little bit. Once I saw we were forming SMT, NQ was in that fair value gap. I entered into a long position with my stop at that previous wick, which was right here. Again, risking like a 6-point stop, right? A 6-point stop to make 47 to 403, right? For like around a 40 point. That's how you want to take those trades, right? A 6 RR risk. I'm totally fine risking this, right? Without a doubt, I'm totally fine risking this. This should be the loss that you want to take, right? Now, it's not the best loss you want to take because, again, this wasn't, an A+ setup, but it wasn't bad. We have an SMT, we have, some sort of market structure, but not exactly what we want. We have, a confident play on the draw. And most importantly is your risk reward is phenomenal on this trade, right? I'm totally okay with risking this much. The only problem with this trade, again, is we didn't get clear market structure shift and displacement just was not there. So that's the only thing. But again, these are the losses we would want to take is if we're risking a super small amount to make a large amount. So then the next trade I took was on ES. This was a really nice winner. We got a 10-point move, around a 10-point move on ES. We ended up coming up again at this point in time. Now that we've broken through this breaker block, I'm pretty confident now that the draw on liquidity is lower, right? We know that whatever that inverse fair value gap is, if we break through it, most of the time, it'll then act as resistance or act as support, depending if we're bullish or bearish. Looking at the charts here, you can see we had this inverse fair value gap right here at the lows. If we look at this 15-minute, notice this 15-minute breaker block as well. And we have this 15-minute fair value gap. Once we break through these levels and we show that we just cannot hold, most of the time they act as resistance when we retest those levels. You can see ES perfectly broke through this and ended up coming back and retesting that previous 15-minute fair value gap. Once I saw this and this amount of selling pressure, this gives me the confidence that the draw on liquidity is now that previous low on ES, right? ES is showing a lot more weakness than NQ. Once I see us come up, I also notice that ES is forming an SMT with NQ on that high. So once I see ES sweep that high, let me pull up NQ out of exactly where that was. Right here. There we go. So once I saw NQ fail to take that high out, right, forming SMT at the highs, we're retracing up to the upside. We're in a bigger fair value gap here, 2-minute, 3-minute on this left side here. And I know the draw is lower. And this gives me great risk reward. And I have a high being swept. So this is a perfect scalp. The reason is because you get an SMT, you have a clear sign on the draw on liquidity. You're in a clear trend. This is what we look for when we're scalping, right? Remember when we talked about the last month about building confidence with the scalping draw? This is exactly what we want to see, right? We have a clear draw on liquidity. We're showing a lot of strength to the downside. I want to see an SMT form at the highs, or if we're bearish, right? So we bounce up, we sweep a high, and then instantly reject, and we form an SMT. That's where you enter, targeting whatever the draw is to get that scalp play. Good risk reward for literally a 4 RR risk reward. Make all that money back from that lost trade and way more, right? That's how our trades need to look, right? So this was a great trade that we took after that beautiful long setup or short setup, sorry. And then I ended up taking it off at this fair value gap here on the 15-minute once we swept this. Now, the reason I didn't take it off here, honestly, is because I didn't have an order there. So I was lucky that it just continued to push down and then I took it off the 50-minute. All right. So going into the last trade I took, this is where I could have I broke my rules. Probably should not have taken this trade. It wasn't a terrible setup, but it wasn't the best. And the reason is because I broke my rules in the sense that we were trading against an SMT on a bigger time frame. So the trade I took was this on NQ. I wanted to see the draw on liquidity be that low on NQ, because this was what was sketching me out today. Is when we came back down, we were literally like one tick on of NQ off of sweeping that level, right? But that's technically forming an SMT, right? If we're looking at a 1 hour, you can see at this low that we never ended up sweeping it, but ES did end up sweeping this low, right? So this is the low on ES. We swept it. NQ, we never ended up sweeping it. So since we were so low, like so close to that level, I would rather see that level get swept than hold, because since this level now holds, this now becomes relative equal lows, and this was most likely going to be a target for the future, right? So now what I'm paying attention to is I'm paying attention to this. So going into tomorrow, since we have these relative equal lows down here, this is going to be our sell side liquidity. So again, the drawn liquidity now becomes these equal highs. I want to see how we react when we take these highs out. Are we going to take it out, push back down? If that happens, then this now becomes the drawn liquidity. Once we sweep these highs, and if we get displacement back down, these equal lows become the draw. So that's what I'm going to be watching going into tomorrow and going into the next couple of days, because also I do want to see that previous high on ES. Now, I'm not going to lie. ES looks very, very bullish. All of this becomes low resistance liquidity. Okay. ES looks actually really, really bullish. And the reason is because all of these lows, all of these highs become low resistance liquidity. And the reason is if we're looking at a bigger time frame, right? Like this looks insanely bullish. I think we get a big, big move up, to be honest. We have, again, bigger time frame. We have a daily fair value gap. We come down, sweep the low, SMT at the lows on a bigger time frame, market structure shift, pull back into that fair value gap, turtle soup entry, because technically we're forming an SMT here. We sweep the low, come up. All of this now becomes low resistance liquidity. So let me take all of this off. And the true buy side is now that previous high, right? And you can tell it's low resistance liquidity if you can just honestly kind of draw a trend line. It's pretty much just a trend line breakout, right? Because since all of these highs are so close to each other, most of the time it'll just go straight through all of those and get to whatever that previous high is. So honestly, I'm expecting a breakout in the coming day, if not tomorrow, to see a push higher and take out this level, and also probably head back to that weekly opening gap, which is at 4192 area. So the draw on liquidity on ES on a bigger time, now on a smaller time frame, low hanging fruit is what I would say would be 4156, which is that previous level. If I was going to zoom in here, low hanging fruit would be this level here. But I think the overall draw on a bigger time frame is that high here, which is 4173, which we could see in going into tomorrow, to be honest. So I'm honestly very, very bullish on ES. And in knowing that I'm very bullish on ES, that's going to give me a sense that I should probably not short NQ tomorrow. If we get a big put, again, knowing the draw on liquidity is way higher of ES than it is on NQ, we could honestly just see a trend move on NQ and go right through this level and just continue up, right? Because if we're looking at a bigger time frame on NQ, like a daily, the draw is still higher, right? If we zoom out, the draw is still that 13,800 level, right? We still have not swept this level, and we're just continuing to trend up. So we could go right through that level and just get a trend day continuing up, right? So I want to be careful taking shorts, because I'm recognizing that ES is looking very bullish, and the draw for NQ or for ES is also higher. So even though that NQ, we're really close to taking this draw here, right? That's this previous high. So this could form SMT, but again, to me, this is low resistance liquidity. I don't believe we will form SMT. Now, we probably will form SMT, but the SMT will be invalidated, meaning NQ will take this level out and form SMT like this, and ES we'll form SMT like this. We'll sweep that high, but form like this. But since this is low resistance liquidity, right? All of this is low resistance liquidity. I think this SMT was going to be invalidated. So we'll break through this, but we'll eventually end up just going through all these levels, in my opinion. So going into tomorrow, I'm bullish. Again, bias is bullish. I want to see how we react once NQ sweeps this level. And also I want to see how ES reacts. Once we break out of this kind of little downtrend here, or honestly, the biggest thing is once we break above this high. Now, there's two outcomes of this. There's two possible things we can see tomorrow. Number one, once we break above this, we just go straight to this 4174 level. That's number one. And honestly, I'm kind of leaning towards that. Once we break this 4156, I'm expecting just a big move to the upside. So that's number one. Everybody have that in their head. This is what I'm leaning more towards. Or we can come up, sweep that previous high, and then sell back off. And the reason we'd sell back off is because I'd want to see NQ sweep that high and form SMT. So those are the two outcomes. I'm probably way more bullish than I am expecting us to take this high and then sell off. But again, we can do either way. We're here to react and not predict. These are just my predictions, but I'm not taking a trade off of them, right? I'm going to wait for the market to show me which way it wants to go. And then I'm going to take a trade based off of what that is, right? But I am overall bullish going into tomorrow. Does anybody have any questions? Does the displacement here invalidate shorts? As you can look at this as internal swept and bought right back up with pressure to possible make new highs. Yeah, okay. So again, if this low is swept right here, then target then becomes that previous high. But if we can't get through this fair value gap, then we're still bear. Then we could see a sell off. So what I'd like to see is this fair value gap. We have to get through this and then I see it act as support. And then that target should becomes that buy side liquidity, right? Once we get above this bearish fair value gap, this should now act as support. But until we break through it, then is that your question? I'm sorry. Wait, hold on. Displacement here invalidates shorts, as you can look. Yes. Okay. Oh, okay. I get what you're saying. Gotcha. Yeah. So if this is going to be your market structure shift, right? If this break would be your market structure shift, you would not short this. You would not short this fair value gap. You would not short this, right? This is a perfect liquidity sweep. This is what we want to see if it's a liquidity sweep, not a break of structure, right? Liquidity sweep is you see a little break and then big displacement back in the other direction. For a break of structure, you want to see a big push through that level, right? This to me, there's no big push. You do not take any short, no short. Does that make sense? Any last questions, guys? I think that's all I have for you guys tonight. Again, charts are setting up for a big move, in my opinion, on ES, especially. News tomorrow? Yeah, let's check news. Going into tomorrow, we have retail sales, again, pre-market, and the rest of the day, we don't really have anything we need to worry about. So no real news, just some pre-market news. All right, guys. I think gonna end the session there. I hope you all enjoy. You on a PC? I'm on my Mac right now because I'm not home, but when I get back on my PC, I will. All right. Enjoy the rest of your night, guys. I will see you all tomorrow morning. Let's continue to have a great week. We're starting the week off strong. We had a good day today. Let's continue to bring that into the rest of the week. So enjoy the rest of your night, guys. Peace.